Welcome back to our next session. We're going to have a discussion around the obligations of accountable institutions. We have dealt with what the Act says, the subordinate legislation, your primary responsibility of registering as an accountable institution when the Act applies to you. We're going to deal with customer due diligence in a separate conversation because it's such a complex type of subject. But let's use this discussion to illustrate what the other responsibilities of financial institutions are, accountable institutions.
Yeah, so now you're registered. You are officially an accountable institution as per Schedule 1 of the FICA Act. What else do you need to do? So firstly, you registered. You've got a 5-digit organization ID number. You then need to appoint a money laundering compliance officer. And remember, like we said, that is appointed by the board. It's somebody senior. They have the responsibility attached in the organization to look after all aspects of FICA. But of course, the board of directors has given this person that authority. Once the money laundering compliance officer is appointed, you then have the task of drawing up this mouthful document called the Risk Management and Compliance Program, the RMCP. Once you've developed it, of course, you're going to implement it. So that's the responsibility there. And then you need to now report in line with whatever the processes are in your organization and in terms of what the FICA Act is asking for, in terms of there's various reports. There's cash threshold reports. We're going to talk about that in another section on reporting. So it's maintaining and doing all of the reporting. And then, of course, you've got to train everybody in the organization to become aware of FICA so that they can assist you, because you as a money laundering compliance officer cannot implement this by yourself. So training is then one of the other requirements. And then finally, keeping all of these records in place and making sure that you have them for 5 years, and that when you then get an inspection, an audit comes around, you are able to prove that you have implemented the FICA Act from end to end.
I would just like to add something with record keeping. In the past, the Act said 5 years, and people kept records for 5 years. It's important to remember that you need to keep those records for a period of 5 years after your relationship with the client was terminated. So not 5 years from inception, from your first dealing with the client, 5 years after your relationship has ended with the client.
Or the conclusion of a single transaction.
Indeed, yes.
Just with regards to that, if I may pick up, also the record keeping, for instance, you have to preserve records of the transaction, the financial details of the transaction, and also you have to preserve your customer due diligence details. There is a requirement in the Act with regards to customer due diligence that you must maintain that information for as long as you have an ongoing business relationship with the client. Here, once the record keeping requirement kicks in because the single transaction has been concluded or the business relationship has been terminated, you must preserve those records, almost like a balance sheet, as they were on the date of termination, but you don't have to maintain them. So it's just quite useful to know that.
And if I can add another technical point on that, if you make use of an external third party to keep your records, you actually need to make the FIC aware of that. So you go onto the GoAML system, on a letterhead or whatever format you choose, make them aware of the fact that you make use of an external third party to keep your records on your behalf.
Is there now provision on the GoAML?
Yes. Well, you actually just add a letterhead, a letter on a letterhead onto the system.
Very useful to know, because
Yes.
I've been telling all our clients, I've been sending them a hard copy letter, telling them to send it via registered mail, because I wasn't aware of that provision. Shows the benefit of a panel discussion, doesn't it?
Yeah, and then finally, if things change. So sometimes your legal entity changes and everybody does it at CIPC and maybe at the FSCA, but you forget about doing it for the FIC, because remember that if you're not collecting cash and you're not making reports all the time, sometimes it's not front of mind. So it's important that if there's a legal entity name change or the money laundering compliance officer has been changed, that information is constantly up to date on the records of the FIC.
Also, to add to that, you have to formally deregister a money laundering compliance officer before you can appoint a new one. So it's important not just to appoint a new one, but to also deregister the previous one.
Quite often they can't have the same email, otherwise you get stuck.
Yes.
And try and retrieve a password if
that's
your money
impossible.
laundering compliance officer has resigned or absconded.
Forget it.
And it's almost impossible. I want to make one or two small points. We make reference to the money laundering compliance officer, and then we make reference to a reporting obligation. So there are two officers that can be applicable here. The one is the money laundering compliance officer. The other one, the person who actually makes the reports, needs separate registration as the reporting officer. It may be the same person, but you need to make both registrations.
And don't ever use each other's usernames and passwords.
I was just going to
It's-
say that part of
they
record
say-
keeping, keep your records of your username and password safe and don't share it with anybody, because it is actually a contravention.
Yes.
Then on record keeping, we've spoken about the requirement to maintain those records for 5 years. Just remember that if that is the longest period where you are obliged to maintain a record, okay, then under POPI, you must as soon as possible thereafter permanently erase those records where those records contain personal information, which is the essence of customer due diligence. So just make sure that your systems are adequate so that when your record keeping obligation under FICA ceases, that you can erase that information for POPI purposes, because you may be stepping out of the frying pan into the fire kind of thing. And then the very last thing with regards to training, often misunderstood. The Act doesn't say that you must do training every year. It says you must do training regularly. Okay? But it also says that you must distinguish between different categories of employees. And it's understandable. For general employees who don't get in contact with situations or people where they might be in a position to identify any of the reportable transactions, all they are required to have is a general overview of the main obligations of the Act. They don't have to have a working knowledge. Okay? So it's quite a superficial one. When you adopt that approach and you identify those employees, then you're also incurring an obligation to keep those employees informed and to make sure that none of them get transferred or elevated into a position where they fall into a different category. So that's the one. Then, for the rest of the employees, like people in your accounts and finance department, people who are client interfacing, people who can come into contact with potential money laundering offences or cash transactions and things like that. The Act actually splits the obligation into two parts. The first one is that they must have adequate working knowledge, preferably tested by way of an assessment of the objects of the Act. Now that, ladies and gentlemen, is the course that we are putting together here. So that satisfies, and at the end of this course there will be some form of an assessment, depending on which course, because all of us are going to be walking away with our own, depending on which one. The assessment may be more or less onerous, I don't know. But then secondly, for those people, again, they have to undergo separate training and awareness of the content of your RMCP. Because there is where they get tested operationally to see whether they are familiar with your procedures. It's no good to only understand the Act and not know what your own procedures are. So there has to be both, but they are separated. So just be careful about
And
that.
that is actually tested at an on-site visit. So they call the reps in one by one in a separate room, and they ask them and they test their understanding of the Act and the RMCP.
So important to keep a register also, because that is evidence when you're having an inspection to prove that you have trained the relevant employees.
So concluding this training, it relieves you of 50% of your burden, not 100%. All right.
Very good. Is that it? Yes. That's it. It's a mouthful, a lot of obligations. Hope you enjoyed it.